Welcome back traders, this is the Options Trader Lounge, and in today's video we're going to provide you a weekend recap of what took place this past trading week. On Thursday we had one of the most important data point that was released this month, which is the CPI that reported a 3.4% year over year gain. This is actually a zero point 0.3 percentage points higher than the previous report, indicating that inflation is still sticky. It is still remaining high. And we are still in a mode where we can expect inflation to stay for much longer. Now, given the fact that we are already halfway through the month of January, there are still more economic data points that we will want to watch out for, and primarily what we're watching out closely on is going to be the retail data report, and that will be coming out this week. Now, Monday is a holiday, so there's no trading on Monday, so we will resume trading again on Tuesday. So with that in mind, let's get right into it. Welcome to the Options Trader Lounge, where we talk about generating income and growing your wealth within the US stock market using options. Thank you all for tuning in. We have a good one for you today, so get yourself a drink, sit back and relax, because we have a lot to talk about. Now, going into the S&P 500 and the triple Qs, we are currently seeing year to date a positive outlook, given the fact that we are much higher from the open, the first trading day of the year. If we look at the year to date, we can see that we are much higher from the first trading price, which was back here with a trading level of 470 on, 472 on the S&P 500. On Friday's close, we closed at 476, so that's roughly a 3% or 3 points higher on the S&P 500. Now, looking at the triple Qs, we are also much higher from the opening price of 405 on the triple Qs, and on Friday's close, which is 409, that is roughly a 3 point higher on the triple Qs. Now, looking at the Dow Jones, that's rough. I mean, there's not really much change here, but the more significant move that we are seeing is on the IWM small caps. Small caps has been on the downfall. This is a 6 point drop on IWM small caps, suggesting that small caps are probably going to be weak for this year, this month, and until things start to improve economically, small businesses and small cap companies are are going to be the ones that are more than likely to be struggling as things start to unwind from what we are currently seeing in the economy. So this is something that we have to watch out for. Now, looking at things in terms of inflation, we are still seeing a decline, a negative decline on inflation. So this is a consumer price index less food and energy because when you add these two factors in, food and energy, it tends to skew the actual chart since these two factors are more volatile. So we're looking, when we exclude these, we're looking at other factors that make up the CPI report. So, but on the positive standpoint, we are seeing a decline from higher prices overall. Now, that doesn't mean that things may change, given the fact that we are still seeing conflict on the Middle East, is primarily on the Red Sea. If you've watched my last video, uh, that is still developing, and there's more, I would say, more uncertainty on that end of the spectrum, especially when we're looking at the trading routes in terms of container shipping. So we don't know how things are going to develop there. That is something that we have to keep in mind of on top of the upcoming data reports that we will see on Wednesday, where we are closely watching the retail sales report, the month over month report for December. This is going to be very important to watch because December is typically where majority of the businesses will make up majority of their sales as people do their holiday shopping. And so we want to see how this is really going to be played into the future, given the fact that from January to this December of 2024, we might see a slowdown in sales overall. And so the ones that can actually sustain consistent sales are really going to be one of those businesses that can have a subscription type of business that will be able to weather the storm, if you may say, on the decline of demand that the Fed is trying to induce into the market, right? So the whole idea of high interest rates is to tamper down on demand, and so we will see how this is going to really play out going on into the future. So with that in mind, there's other things that we also have to watch out for the remaining of January. One of them being the Fed interest rate, which would be taking place on the 31st of January. So this is going to be very important to watch because um, we are already expecting that there isn't going to be a cut per se, but what we are going to be watching on this day is more so of the Fed's outlook, his commentary on what he is expecting to see as things are developing, which is brand new in the Middle East, and how that's going to affect the overall economy within the United States. So this is what we are watching out for. Now, going into this upcoming trading week is really going to be focused on earnings, right? So we have a lot of the financial companies that are going to be reporting, and then we have small other companies here. But the big kicker is going to be not this week, but the following week of January, right? The last full week of January, where we will see large tech report. And so this is what we are going to be watching closely because as we saw 2023, the the main driver of 2023's results for the S&P turning up on the positive end is really from the magnificent 7. I'm not even saying that right. Apple, Tesla, those big names, Microsoft, Google. Those are the companies that are really carrying the results for 2023. And the question now is, are they going to do the same for 2024? And so this earnings report is going to give us a preview of what these companies have really thought out on their outlook, and this, which is going to be very important for our decision making when it comes to trading, because we saw a fabulous result of 2023, producing over 20 percentage points over the entire year. It's People say that it's unlikely that we will see the same results for 2024, but again, you may never know. So these are the things that we are watching out for. Now, going into the technicals, we have the S&P 500 which is what we mainly trade, and we saw a close at 476. Now, this is the year-to-date result, but we want to really look at how is this performing from the prior possibly 3 years. Well, right at the close on Friday, we are right up against the 2021 high of December. Now, people are very fearful that this may turn into a double top and possibly sell off from here, but we can see that on the weekly chart, we have a strong momentum to the upside, suggesting positive returns that we may see in the next few weeks to next few months, as we are testing this level, which was a long fought level, given the fact that we've seen a big sell off in 2022. Now we are seeing the same exact results with actually this close on Friday, which is much higher than this 2021 high. We are up against it, and we're slightly peeking through with the momentum indicator, the MACD, which is again on the positive end, much above the zero line, suggesting strong positive momentum to the upside. We also have strong EMA lines with the 200, 150 still resulting as positive. Now, looking at the Dow Jones, we are again seeing positive returns. This does not mean that we can expect a pullback back into these moving averages, but you may never know. Things may just continue to rally higher before we get a dump. And again, IWM still on the positive end, a lot weaker than the other three, but nevertheless, it is positive, but it is right up against this down descending trend line on the upper bound range. So now we have these results. The question is, where do we go from here? Well, what we have to do as traders is look at this day by day, and look at internals such as the VIX volatility, given the fact that we are on the lowest, nearly the lowest levels of the VIX, slightly tapping 12 down here below, which was back in December of 2023, and we are slightly falling down again to those levels once more. Again, with the MACD lines, the MACD momentum indicator suggesting further downside, we don't have positive drift to the upside. So we can suggest or we can assume that we should have more upside momentum to be given. So that is what I have for you today. If you like this video, please go ahead and subscribe to this channel. Please leave a like down below. And if you have a different outlook on your take on what you may expect to see this upcoming trading week and trading months that are ahead of us, please leave a comment down below. We'd like to hear from you. And once again, we will see you on the next one.